Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equities are set for a mildly cautious start in the earning heavy week and of course the day. SGX Nifty indicates a mildly positive start for the broader index. It's gained almost 45 points on Tuesday, so keep an eye out on overall somewhat cautious to mildly positive start coming in for the markets. Nasdaq slipped ahead of earnings from big IT companies and fresh economic data. Asian shares at this point of time trade mixed amidst negative US markets handover. So that's one thing that we need to keep an eye out. FIIs, they've sold shares worth around 412 odd crores, and DIIs on the other hand have bought shares to an extent of around 1,177 odd crore. Bajaj Auto, HDFC Asset Management Company, Nestle, Tata Consumer Products, Dalmia Bharat are expected to report their earnings just today. Mankind Pharma IPO will be opened for subscription just today. So it's an eventful day ahead for you guys. Brace yourself. But before that, let us get going and discuss some stocks and strategies today with Aamar Singh, Senior Vice President, Equity, Commodity and Currency at AngelOne. Good morning there.
Yeah, very good morning, Nickey.
Aamar, it's going to be a earning heavy day today. A couple of events lined up today. Nestle is reporting in numbers. Also, you have Bajaj Auto. Overall levels for Nifty and Bank Nifty right now.
I would say that both Nifty and Bank Nifty I would continue to remain positive. Yeah, we did see some consolidation in Nifty, and we witnessed some sort of correction from almost 17,860 levels to 17,600. Again, it's around 17,747. So clearly shows that the favor is in it's in favor. The market is in favor of the bulls. But as far as Nifty is concerned, because Nifty we have got different types of constituents. You got the IT, you got the pharma, then you got other sectors as well. However, on the Bank Nifty side, I would say the trend is extremely strong, because Bank Nifty on the short-term chart, long-term chart also the trend is up. So coming back to the levels, I would say for Nifty, immediate crucial support zone is around 17,600, 650. That's an immediate short-term support. Major support I've already spoken many times. It's around 17,200, 300. On the upside, Nifty needs to sustain above the 17,850, 900 zone for any meaningful rally towards the 18,000 levels. That's one. As far as Bank Nifty is concerned, Bank Nifty has, if you look back, so on 17th April, the high that Bank Nifty had made, so that's taken out. So clearly shows that Bank Nifty is on a stronger wicket. And looking at the levels on the upside, 42,850, 43,000, that's an immediate zone of resistance. Whereas support is somewhere around 42,000, I would say 42,300, 400 zone. That's an immediate zone of support for Bank Nifty. The trend definitely remains positive, so any dips should be used as a buying opportunity. But yeah, it's more of a trading play as of now.
All right, Aamar, also I would like to understand your reading on the charts for Nestle as well as Bajaj Auto. These are going to be the two key companies that will be coming up with their earnings today. What do you make out of it?
I would say going by the charts clearly shows that Nestle should report good numbers, because technically, if you look at the charts, the stock is currently around 20,690 or so. And if we go back in time and see somewhere, so it had made a high of 21,050. That was in October, and prior to that, October 2022, and prior to that, in September 2021, it had made a high of 20,600. So this 20,600, 21,000, that's going to act as a zone of resistance, but the trend definitely remains extremely positive for this stock.
All right,
and the other stock which you talked about was?
Bajaj Auto.
Yeah. So looking at Bajaj Auto, what we see here is that Bajaj Auto is also strong on the charts. On the weekly charts, intermediate term trend, which we call, that's extremely strong. And it's reached crucial zone of resistance, because earlier it was unable to breach the 4,100, 4,150 mark. So now it's consistently sustaining significantly higher than that. So clearly shows that there is strength in the stock. Any dip can be used as a buying opportunity. For Bajaj Auto, the immediate zone of support is somewhere around 4150, 4200. That's an immediate zone of resistance. Upside, if I go back in Bajaj Auto and if I look at the chart, so the stock had made a high of 4,347 and 4,360 in March. So March 2021. So that's going to be a immediate zone of resistance, but the trend is definitely very strong and positive for both Nestle and for Bajaj.
All right, Aamar, we'll quickly address the stocks and news that we have. It's, bunch of the stocks that we need to talk about. Of course, first in the list, we'll be addressing something in the like of Nestle India, the preview out there. Bajaj Auto, we'll have a detailed discussion for that. Persistent Systems, Welspun India, IndusInd Bank are among some of the counters that we'll be addressing. But first, I'd like to address Persistent Systems. Do keep an eye out overall on the mid-cap IT space. Yet again, strong number of coming from the mid-cap player. Cyient, Mastech, and now Persistence. Revenue up by 3.9% sequentially. If you talk about EBIT, up by 4%, and talk about the margin profile of the company, at this point of time, it's flattish at 15.4%. But the net profitability, that's risen by almost 5.7% sequentially for this one. Dollar revenue is up by 3.9% for Persistence, and the dollar revenue growth, the forecast is at 3.9% versus the poll of around 3.6%. So more or less, I would say more than what the street estimates were. Net looking at a positive set of numbers coming in from Persistent Systems right now. Remains to be seen how mid-cap IT space would react to that one. Nestle India, another big company reporting in the numbers. It's going to be the first quarter number for Nestle India. Remains to be seen how rural demand stacks up. Expecting revenue to be up by 12%. EBITDA to be up by more than 10% year on year, and if you talk about the margin profile, it's expected to be flat around 23%. Profitability for the company is expected to increase by more than 13.5% in this quarter. Most of the other parameters that we'll be keeping close eye out for Nestle, of course, will include the likes of revenue growth, which is expected to be led by the price hike. 8 to 9% is what the street estimation is. Volume growth is expected to be seen between 3 to 8%, or their gross margins are expected to decline because of the input pressure coming in from the dairy costs. IndusInd Bank, well, I would say a weak quarter when it comes to operational, but if you talk about CLSA and the review that it has on the IndusInd Bank, it's maintained a buy. Target price of 1,500. Right now, the stock is trading around that 1,100 mark. It says that the Q4 is largely in line with the estimates on core PPOP and the profitability front. In terms of the NIM profile, it's flattish when it comes to the sequential performance, but the retail yields, they've inched up. There is a margin pressure which the management feel is expected, or the brokerage feels is expected to be manageable with the rate cycle, which is expected to reverse. Also, do keep an eye out on Welspun India. There's a buyback announcement on that one. The board will meet on 27 to consider not just buyback, but dividend and also results for the financial year. Also, we'll be talking about Bajaj Auto, but that's just going to be in a jiffy. The stock right now is at a fresh 52-week high. It's up by more than 20% in 2023. We're going to be talking about how the preview is expected to stack up. But these are a bunch of names that we have overall on our list right now. Aamar, I'm going to quickly come back to you and ask you about the two profitable ideas that we have for our viewers before we address the market's opening for you.
Yeah, the first one is Axis Bank. So Axis Bank, if we look at the charts, I would say it's fairly positive in favor of the bulls. It is witnessing some sort of breakout on the short-term charts as well as the long-term charts. Is very strong support. So this is one stock one can definitely look at. Any pullback towards 875, 880 levels can be used as a buying opportunity with a stop loss of 843 and a target of 943 on the upside. The second stock to look at is from the hospitality sector, and that's Indian hotels. So this is one stock which has been gradually inching up. If I look at the charts, I'm talking about the long-term charts, quarterly charts, or the monthly charts. They clearly show that the trend is very strong. Yeah, there's some sideways consolidation that happened in the stock. It was trading between 300 and 320, 30. Now it's reached that level. So this is one stock which can definitely look at. So any pullback towards 320, 325, ideally that can be a very good level to buy with a stop loss of 301 and a target of 363 in the short term.
All right. So Indian hotels, Axis banks are some of the bets that Aamar has suggested this morning. But also let's talk about Mankind Pharma. That's going to be one IPO company that is coming up. Is opening up for subscription out there. 10% OFS of 4 crore shares. Issue size is around 4,110 odd crore to 4,326 crore. Price band is between 1,026 and 1,080. Promoters are selling in 1 crore shares. And these are some of the things that, the dynamics that I'd like to highlight for Mankind Pharma. But gravitating our conversation back to Aamar and asking about IndusInd Bank, the numbers don't look to be so appealing at this point of time, but CLS is more or less given an inline set of numbers performance coming in for IndusInd Bank. How does the chart look like right now, Aamar?
I would say IndusInd Bank, there's no trend currently in the stock. So it's more of a range bound. If I look at the weekly charts, if I look at the monthly charts, clearly shows that there's not much buying strength in the stock. So the bulls and bears, it's more of a tussle and equally placed. So till the time we don't see the stock sustaining above the 1180, 1200 mark, I would say the stock is likely to consolidate. And on the downside, the stock has got very strong support coming at around 1,000, 1,050. So it's a very good trading range play. So between 1,000, 1,050 and 1,200, that's the zone for this stock, which clearly shows on the reflects on the weekly charts as well as the monthly charts. So there's no trend in the stock as of now.
All right, so no trend per se when it comes to IndusInd Bank. Remains to be seen how does the stock stack up overall. But we're going to be addressing in the markets opening for you in just a jiffy, just 15 seconds to market open right now. We're addressing how typically Bajaj Auto stacks up, Nestle stacks up, Welspun India. There are a bunch of earnings out there. Also, asset management companies are going to be reporting in their numbers. So clearly, we are looking at slew of companies reporting their numbers out there. If you talk about the Nifty 50 index overall, we are looking at a flattish trend coming in for the markets with positive bias. So do keep an eye on the Nifty 50 index and see how does the index gradually move up. I guess most of the market participants are pretty much waiting on the sidelines to see how does the FMCG basket stack up, how does the auto demand stack up. Much of it is also dependent on how the rural income is behaving in this quarter. Bank Nifty, that's another one for you just to see if there is support being lent. So far, there is a resilience being seen from the Bank Nifty index overall. We are seeing some amount of gains coming in for Bank Nifty index. We have seen gains of around 0.1% out there for Bank Nifty, showing that resilience, continuing to building on to that momentum per se. Let's talk about the other sectoral indices that we have on our list right now. FMCG basket is not holding up well ahead of Nestle's number. Not typically a good start, I would say, but let's wait to see how does the commentary really stack up. In terms of the other sectoral indices that we have on the list right now, IT index down and out, losses of close to 0.5% on that one. So Midcap IT name, persistent systems is what we need to look at after we look at the sectoral indices. Of course, we're also being looking at something in the likes of the auto basket, which right now is holding up and bright for you. Bajaj Auto would be coming up with the numbers, and we're going to be holding up a discussion for Bajaj Auto in just a bit. But that's that in terms of the sectoral indices. The pharma index right now down and out with losses of close to 0.25%. And in terms of the real estate, the infra basket right now is holding up for you with gains of around 0.2% out there. Talk about the real estate index. That's also holding up for you. 0.2% of gains coming in on that one. If you talk about overall advance and declines ratio, just to see where the market breadth is stacking up right now, 28 advances versus 22 declines. So clearly market breadth right now has been favoring advances. Also the top gainers and the top losers out there. Just to see the flavor of the markets. IndusInd Bank, well, that's the one which is holding up in green. Eicher Motors and Hero Motocorp. These are some of the top gainers that we have on our list right now, right ahead of the Bajaj Autos number. Bharti Airtel, Maruti Suzuki and DV's Lab. These are some of the other gainers. So clearly it's the auto back auto pack, which is shining and in top gear for you right now. Britannia, Adani Enterprises are some of the other names that are featured into the top gaining list per se. Top losers, UPL, DRL, Tech Mahindra. These are some of the losers out there on the list for us. Kotak Mahindra Bank, Infosys and TCS, some of the other names. So IT pack essentially is dominating the losers, while auto index overall is the top gainer that we have on our list right now. So that's that when it comes to the sectoral gainers and the losers out there. But also let's address in what we have for persistent systems, just to see the flavor that we have for mid-cap IT names, because Cyient reported good set of numbers, Mastic reported good set of numbers, splendid set of numbers. Let's also look at persistent systems for you, what the stock is doing, just to understand if we are looking at some amount of gains coming in. Okay, right now not really holding up too well. We are seeing some amount of losses coming in for persistent systems overall. And if you talk about the other index, let's also look at Nestle India right now for you. It's going to be another big company which is coming up with the numbers right now. So do keep an eye out on Nestle India also, for that matter. Apart from that, we'll quickly talk about Bajaj Auto. So, Aamar, one last question before we let you go is, what's your view coming in overall for something like a Britannia, for that matter? Nestle is expected to report in numbers, and right now Britannia is one of the top gainers that we have on the list right now. Your view on that one?
I would say that Britannia, the long-term trend is very strong. On the monthly charts, I would say on the weekly charts, there's more of consolidation. So what is likely to happen in Britannia is that the stock needs to sustain above the 4,400 mark, because that's a zone of resistance, because that was in April. I would say on 17th April, it had made a high of 44.06, but it's unable to sustain. But yeah, it seems to be forming a base. So once the stock sustains above the 4,400 mark and continues there for a couple of days, we'd say that the trend has changed and the stock can then move towards its earlier highs of 4,600, 4,650 levels.
All right, Aamar, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, let's now actually talk about the whole auto space, and Bajaj Auto is expected to be in focus today. 52-week high has given gains of more than 20% in this financial year. But how does the commentary stack up? We've been joined by Yatin Mota, the Associate Editor, CNBC Awas, to give us the lowdown on how does the number look like.
Good morning, Nickey. Now, you look at Bajaj Auto, and this time, obviously, there is a meager 5% revenue growth on a year-on-year basis. But more importantly, this time, there would be some decent margin expansion. Remember, we have the commodity costs which have come down, and the company has increased prices several times. And probably that would help, margin get a tailwind. And probably that is the reason why, despite a 5% kind of a revenue growth, we are expecting the EBITDA on an absolute basis to increase by 15%. Obviously, because the EBITDA is moving up, we will also expect the profits to move in tandem. But the most important factor will be the management commentary on the export markets. Now, nearly a third of Bajaj Auto sales earlier used to come in from the export markets. We had Nigeria, Egypt, Sri Lanka, all of these key export markets for Bajaj Auto had some political unrest or, geopolitical issues, because of which the exports have slowed down. However, the management, when we spoke to them recently, told that they would expect the export markets to bounce back. Locally, if you look at the electric vehicle foray, there also the company has been doing well. They have been putting new capex and capacities with respect to the electric scooter and three-wheelers, which they plan to introduce in the market very, very shortly. So yes, the management commentary, apart from the earnings, will be quite important for the export markets as well as the electric vehicle strategy. As you were mentioning, the stock is already at a multi-year high with returns of almost 20% so far in 2023.
Also, Yatin, Maruti Suzuki has announced in price hikes, at least for the much-awaited entry-level SUV.
Yeah.
Overall, what do you make out of the auto space, and what kind of numbers for the entire segment can be expected? It's overall a good quarter coming in for the space, right?
So yes, for autos, Nickey, because there is a tailwind of margins because commodity costs are down, that would provide support. And most of the auto companies we spoke to have also increased the prices. So clearly, the price hikes coupled with falling commodity costs will probably help aid margins. For Maruti, they have done a couple of new launches because of which there could be again a tailwind on margins because new models typically have higher margins. So for Mahindra and Maruti do expect better margins on a quarter-on-quarter basis. Sorry.
All right. Yatin, three key monitorables, if you can just put it down for Bajaj Autos. One, of course, as you mentioned, would be the commentary.
Yeah.
Which are going to be the other two key monitorables that, most of the viewers should keep in mind?
So clearly, EV strategy is something that markets will be watching out for because that is one area wherein the market sees valuation upside. Typically for Mahindra and Mahindra, we saw the outperformance in 2022 only because there was a big EV push by the management and, there was a strategy in place. SUVs did well. So probably for Bajaj Auto, the market is looking for clarity. And also, Nickey, they had announced that they will be aggressively ramping up the Triumph dealerships as well as launching new products in that segment, which is again a competitor to Royal Enfield. So the, commentary on Triumph, new products, EVs, margin outlook is something that we'll be watching out for in the management commentary.
All right, Yatan, we'll leave it at that. Thank you so much for taking on the time and speaking to us. It was indeed a pleasure having you around. But let's navigate our now conversation to more broader issues, something in the like of the FMCG basket. We've been talking enough and more about the El Nino. We were talking about the rural demand. But let's actually see how does this stack up overall. We've been joined by Mayuresh Joshi of William O'Neill Company to take the discussion forward out there. Good morning there, Mayuresh. What do you make out? What are the expectations coming in for the FMCG segment today? F&B overall sub-segment will be reporting in the numbers. You have Tata Consumer Products along with Nestle, which will be coming up with numbers today. And on a Thursday, you have HUL, which will be reporting in the numbers. What do you make out of this space?
Very good morning to you, Nickey. Two, three perspectives about the space as a whole. Now, the numbers that you probably witnessed in the previous quarter, a lot of managements were hinting that the worst in terms of the volume degrowth that you probably witnessed for most FMCG players should largely be behind us. So Q4 should largely be a quarter where volumes start recovering. And Q1 should be the quarter where you should see an earnings recovery in volumes. Having said that, the kind of grammage cuts that you've probably seen and the input cost deflation that has probably happened over the last few weeks and months, that acts very, very positively for the FMCG players as a whole. Because with input costs coming down, the expectations in terms of stability of margin probably sustains for most companies going forward. Third, I think with the kind of savings that you're probably envisaging, the expectations in terms of most of the savings either going into ad spends to increase the top line or the volume or the revenue growth is a given. At the same time, you might also probably witness more grammage probably coming through. So the large expectations is management commentary should largely point out towards the second half because interestingly, I think second half is where 60% of the bulk of sales for FMCG companies happen. Urban consumption has been holding out very strongly, is expected to continue doing so. And therefore, I think the balanced outlook in terms of volume growth and the second half recovery is what the consensus should be for most managements within this space. We have been hearing about El Nino, but a couple of forecasts are pegging long-term averages around 90-95%. So how the monsoon progresses will obviously determine second quarter numbers for most FMCG companies, including rural growth. But in a lot of strategies that they've embarked upon, including the direct distribution, the rural reach, and different SKUs for rural, semi-urban, and urban India, I think that should start holding up well. So I expect commentary to largely focus, Nickey, on the second half. For Nestle, I think it should be a higher single-digit volume growth. Margin should be quite stable. Profitability on a year-on-year basis should be seeing a significant jump, more than 50%. So on a quarter-on-quarter basis, should see some tepid action happening or some de-acceleration happening. But again, as I said, I think commentary will largely focus towards the second half. And with deflationary factors playing out, margins should start holding up for FMCG companies from this quarter.
All right. So that's the word coming in overall. Also, I would want to understand a little bit about the mid-cap IT space. Mayuresh, Persistent System came up with numbers. It's relatively a fair quarter, I would say. What What's your assessment? Because the stock isn't really giving a very splendid move, right? Like how we saw for Science, how we saw for Mastek. What do you think is happening with the mid-cap IT space right now?
So very interesting, Nickey, that you ask. For Sahent and Mastek, I think the expectations that a lot of analysts on the street had, the stocks clearly outperformed analyst expectations, and the commentary also was very, very positive, both in terms of expectations of order flows, execution, margin trajectory, and therefore I think the expectations of constant currency revenue growth, along with a very stable margin, pegs that the stocks might do well from a valuation perspective when it comes to forward multiples. For persistent numbers, bang in line with expectations. The CC revenue growth at 3.5% was higher than what the analysts had pegged, but the margin profile and the bottom line growth more or less in line with expectations that the street had. Now, it all really depends on the commentary in the con call, and if the management portrays a significant amount of traction that it probably sees in the domain that they operate out of, the stock should start getting re-rated like a Science and a Mastek. So yes, I think mid-cap IT have clearly outperformed Nikkei's large-cap peers, at least at this point of time. My own thesis suggests that the kind of orders that they operate out of, that 1 million to 5 million band, those order wins are still continuing. It's those large multi-million orders which might get delayed or tapered off a little bit. But these small order wins for mid-cap IT companies are still continuing, at least from the results that we've seen so far. And therefore, even the other numbers, the stocks like KPIT, Sonata, which have produced brilliant set of numbers so far, with good client wins reported in these quarters, in the preceding quarters between Q3 and Q4. I think it'll be very interesting to watch how these companies deliver. In the morning also, I think LTI Mindtree received a reasonable amount of order win, which probably boosts their revenue visibility as well. So I think mid-cap IT prospects are holding out better than its peers at this stage.
That's clearly the point. And you know what I fear the most, Mayuresh, is that this quarter could be an aberration of sorts for mid-cap IT space, because as and when the scenario gets a little more grave for the entire IT space, with just the mention of shadow recession out there, these could buckle under the pressure given the kind of macroeconomic scenario, vendor consolidation. But that's that when it comes to the IT space. Let's talk about financials out there. For IndusInd Bank, there have been a couple of things not working in this quarter. For instance, we're looking at cost to income ratio, which is the highest in 16 quarters. We're seeing slippages, which have been higher than the street estimates, and improving. It comes at a time when there is an improving asset quality scenario. Right now, how are you viewing the entire banking space? ICICI delivered a beat, HDFC fairly decent, and now we have IndusInd.
So reasonable set of numbers and a very decent set of numbers. I think ICICI Bank, the expectations largely, Nickey, were of very strong growth, and the bank probably delivered on all counts. Now the management has been very candid that the kind of NIMS expansion that you've probably seen in the previous few quarters should start tapering off, because as deposit accumulation starts happening at higher rates, the rebalancing between assets liabilities is obviously going to pull down NIMS to a certain extent. And therefore, I think moderation of NIMS is something that we should expect in a rising rate interest scenario, which has already probably happened, and most of the rate hikes are behind us. So I think for the next few quarters, or at least for the first half of the next financial years, there would be a moderation in NIMS. How the deposit mobilization happens for the space as a whole is going to be extremely important, because on that basis, the kind of advances growth that we've been used to for the sector as a whole, specifically post-COVID, should start determining the fortunes of the industry as a whole. Overall, I think for numbers, HDFC, ICICI, very strong set of numbers in my opinion. Even IndusInd Bank has largely not disappointed. I think the asset quality pressures, both GNPAs, NPAs have started coming off. And therefore, to a large extent, the kind of slippages that we've probably seen, the watch list, both B1 and B2, the expectations in terms of the entire restructured book, and expectations of cost to income ratios expected to stabilize and come down, largely stay within the ambit. The only factor that probably stays weak is the kind of lending that will go forward as we approach the next financial year in the context of a shallow stroke hard recession of whatever might happen in the US and the European zone. A lot of unsecured lending has probably started picking pace to balance out the advances growth. And that is where I think the concern might emanate if it does, if I have to just point out a weak link within the sector as a whole. So I think that might probably be the only weak spot that banks might probably face, unsecured lending and aggressive one at that, which might build up asset quality pressures if certain defaults start happening in the second half of this year. But largely, I think earnings have been very, very good so far. Even on the PSU space, a bank like Bank of Maharashtra produced a very good set of numbers. So my own sense is that banking financials will continue reporting a reasonable set of numbers.
Right, reasonable set of numbers coming in for the banking sector. A bit of caution out there for the second half, but overall, right now the earnings have stacked up well. You talk about HDFC, you talk about ICICI Bank, and even IndusInd Bank for that matter is now trading with gains of around more than 1% out there. The asset quality hasn't really deteriorated as much as what the fears were. So clearly we are looking at decent set of numbers. And also if you talk about the mid-cap IT space, you know, you've seen the stocks right now recouping some of the early losses out there. So something in the like of KPIT also is trading higher, and Persistent Systems too has cut back some of its losses that it registered early in the part of the day. But Mayuresh, we are going to leave it at that. Thank you so much for taking out the time and speaking to us as always. With this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.